How should domestic investors who very closely follow the news of the Fed that we cover here every morning seek to compare the actions of a Bank of Japan versus what's happening here?
Japanese inflation rates are very low. They're only about 2%, but this is the first time in a number of decades that they've even come close to that target. So it does suggest that the Bank of Japan could begin to alter its policy stance with actual rate increases. If that is indeed the case, that's going to put further downward pressure on the US dollar, a good thing for US companies, not the greatest thing for import prices in the United States, which could add to further inflationary pressures here in the United States. So there is the possibility for that. And I think the most significant on top of all of it, JD, is Japan is the world's largest holder of US Treasury bonds. They are the biggest, basically, creditor to the United States. If it turns out that higher Japanese government bond yields give their citizens an alternative to investing in treasuries to fund their retirement, and it's one of the oldest populations on earth, that could have carry-on implications for US borrowing costs going forward. It won't be significant and it won't be titanic, but at the margins, it will be increased. And that, of course, has implications for tax and spending policies here in the United States, and indeed the overall shape of the US yield curve.